So today's lecture, we're gonna go over typical support and resistance and why I don't use it, because oftentimes it fails you as a trader because you're looking at the support and resistance lines that you have on your chart and you're not really paying attention to anything else other than that. You're just hoping that your trades will hit those levels. Sometimes they work out, sometimes they don't. Sometimes they overshoot the levels, so on and so forth. So we're gonna go over what your typical support and resistance would normally look like, and why you should trade, a different system. And I'll get into that later on. In another lecture will be just about that way of trading, and it'll tie this whole course together once you finally get down to the way I trade and how you should look at the markets, and the whole nitty gritty of this course, which would be the perfect entry and exit strategy in trading Forex, cryptos, penny stocks, options, pretty much any market that you want to trade that's dealing with the financial markets. You can trade with this strategy and it will be profitable for you. So without further ado, we'll get right into support and resistance lines, support and resistance areas, whatever you want to call it, and show you why they work and why they fail. So normally a chart will be set up with horizontal lines, and you'll go in and you will mark these lines on your chart as such. So you'll find a typical high in the market where you see, the market printed a high, and you would put a resistance line there. You'll go to the left and see, hey, the market did trade on this level, broke this level, came back down, swung through the level, came back up, broke the level again, came back down, swung through the level, broke the level again, swung through the level, broke the level, and rallied to the high side. So right here, you would put another level, because that's the highest peak to the left. Then you would come down here and say, okay, the market made support a few times here. You just mark these levels throughout your chart. So you have your typical support and resistance here. This is what it would normally look like, on a chart of support and resistance levels. So you have all these levels, and I'm on a 4-hour chart, which I usually trade. I swing trade mostly. So I use a 4-hour to find entries for the daily. And, I trade entries off the 4 hours. So I normally look at this chart to go find my entries and find good levels for daily support and resistance. So if you look at these support and resistance lines, you'll see that, hey, the market really is respected to these lines. It comes up, hits lines, breaks through the lines, touches the line, goes back up and touches the line, comes all the way down and touches the line. So, hey, this really works. Support and resistance is, like magnets for price. And you would be correct. And you would also be wrong. You will be wrong because if you look in areas such as these that I'm going to mark out for you, if you look at areas such as this area here, this area here, these areas here, or even this gap in the market right here, what happened to your support and resistance lines? The market eventually got up and touched this line. So theoretically, you would have been correct, but you would have been wrong in as price shot through this level. You were holding a trade or entering a buy in order for the price to get all the way up to this level, and you found heavy rejection here at a resistance in the market that you don't have on your chart, and the market dropped heavy sell. Only looking at these support and resistance levels, you would have missed out on a great trading opportunity. So you can go all out through the charts and find areas such as this and how you would have missed trades looking at, just hard support and resistance lines. So I like to call them hard lines because they are locked in lines that are locked into your charts. You lock these lines in and you figure that, hey, the market will eventually come to those lines. And, eventually they do. Eventually the markets come up and touch your lines. They break through your lines. They come up and touch your line here, break through, and then completely fail in touching the line above. And then you ask yourself why. And we'll get into further detail on, the next video of what you should actually use as support and resistance. It'll paint a better picture for you to be able to see the market and what price does and what the market actually does. So just wanted to make a quick video of support and resistance levels of, how the market can fail at these levels. And if you're new to trading the markets, the top line would be your resistance, and you have to think of that as the ceiling. How high can the trade go? Can it break the glass ceiling? And you think of support levels as a floor, or you can think of it as, steps going up. The market moves in steps. Or waves. So you want to look at it like that: a glass ceiling and a hard floor. Can the market break through your ceiling, or can the market push through your floor? In order to break through your ceiling, you would need a heavy push through the market and a bullish momentum. And you would need a heavy push to break through the floor in bearish momentum. And that all comes down to price. And we'll get into price as well and how you look at price to know which way the market is going to go, how bullish or how bearish a candle is at, these levels will indicate to you where price is going. And then it's just other little tricks of the trades that you have to tie into, support and resistance and price action in order to find good entry and extra points in the market. So I just wanted to leave this quick support and resistance video with you and show you how you can fail at just looking at hard support and resistance levels. There's something simple for, your eyes to look at, something simple for you to study. Once you overcomplicated the market, then it makes trading overcomplicated for you. And you tend to lose because you will see a trade and then you won't take it because you're looking at these levels here. But if you're looking at price and what price action was telling you to do, you would know that this level was going to fail and the trade would rally to the upside. But again, we'll get into that in price action lecture and dive deeper into detail about price action, and how you can tell where the market is going. So I hope you enjoyed this quick support and resistance video, quick, synopsis of why support and resistance levels can fail and why they can work. But the overall picture that we're trying to build to you in this whole lecture series is to put a whole trading strategy together and how to use it with all these little key points in order to find the best entries and the best exits for you to become a profitable trader. So thanks for watching this video, and the next lecture will be more in detail about support and resistance levels based off of what price is telling you at those levels. So thanks again for watching this video. I hope it was educational to you. I hope you learned something from this simple but informative description of support and resistance. And we'll get back to you next time on the next lecture. Appreciate your time. Appreciate you having the patience to dabble into the market, because this is not something that's, easy to do, something that requires a lot of time or a lot of patience and a lot of skill. So if you take this on, just know that you have to have, those key elements in order to become a profitable trader. So again, I'll just leave you with this quick video of support and resistance. And thanks again for watching.